Welcome, and thank you for joining us for today's Digital Airstrike Facebook Live. And it's all about the state of the auto industry. My name is Eliana Raggio, and I'll be your moderator today. And we have a great show in store for you today. I'm so excited about it. First, let me introduce Erica Sietsma. She's the Chief Operations Officer here at Digital Airstrike, where she leads the product, operations, and technology teams. She is a 20-year veteran of the auto industry, and Erica is passionate about bringing change to the industry to focus on the impact of customer feedback and how it drives operational changes at all levels. Thank you for joining us today, Erica.
Thanks for having me, Eliana. And I didn't catch this, but luckily today I just run operations. We've got Jason Berry running product and David Pinkett's running technology. So we need to update that bio.
I appreciate it.
Hats off to them.
Thank you for that. Joining Erica today is none other than Patrick Manzi. He is the Chief Economist at NADA, where he leads the research, forecasting, and industry analysis that NADA puts out consistently. From the market beat reports, the annual and mid-year reports, the dealership financial profiles, you name it. He is the guy behind all of that data and insight, and he's going to be sharing some of that with us today. Thank you so much for joining us, Patrick.
No, thanks for having me.
Okay. I am so glad I have two amazing experts here. So let's just start right off with the first topic. It's on the top of everyone's mind in the industry. Low inventory. Patrick, how bad is it, and how the heck did we get here?
Okay, so we're at kind of record low inventory levels, I believe. Record lows for the month, if not absolute lowest and second lowest of all time for the end of June. We're sitting right now, let me pull up my little cheat sheet here. We're sitting right now here, I believe, at 27 days supply for the industry, and that's down from just under 60 days supply at the end of June last year. And actually, June last year was a little bit lower than we normally would have expected to see it, because if you remember, the auto plants closed at the beginning of Q2 last year when everything was locked down. And sales were still happening for those several month periods. And so inventory had kind of already begun to be depleted heading into June just a year ago. So then we start, we see retail sales recover by the fall, and demand remains strong. All the while, you kind of had limited capacity in your auto plants because of COVID precautions. You couldn't have everybody standing on the line. And so there were some limitations. And just when we start to get to a point where you can go full capacity, well, the chip shortage hits us. And people come out of lockdowns after getting vaccinated. They get back to their daily lives. They've got money in their pockets, and they want to go buy new cars. And we actually saw the third highest SAR on record in April 2021, right after we had another big stimulus round of stimulus checks go out, and then people really starting to come out. So far this year, because of the chip shortage, demand has been higher than OEM's abilities to restock lots. And so that's where we are right now. We ended June at 1.4 million on the ground. And unfortunately, we expect July is going to fall further, probably to 1.25 million, maybe 1.3 million by the end of the month. But hopefully by the end of the summer, let's say early September, we'll start to see some change there.
Now, this low inventory, this has been a few months now. And Erica, we have been putting out a lot of information for dealers for the last few months on how they can overcome that challenge. There are ways. Now that you see these numbers, it's kind of scary. It's like 1/3 of what dealers have historically been known to have on their lots. Let's talk about this. Strategies that dealers should employ to overcome this low inventory challenge, because as we're going to hear a little bit later on from Patrick, we're going to figure out how much longer this thing is going to last. But for right now, what can dealers do?
Yeah, I mean, I think that what we're seeing from the dealers that we're talking with is, inventory is low, but they've adapted so well over the last few months. So they're pre-selling everything they're getting. It's a whole new world of orders and managing through that. So what they've gotten really good at is, especially our top dealers, is managing those inbound leads as if they have all the inventory in the world, right? It's not a big deal if the lead I got isn't the vehicle that I have in stock. We've seen dealers get really good at switching inventory. So it makes that initial lead response, showing alternative vehicles, being quick to respond. And this has been a challenge, right? Because one thing we're not going to talk a ton about is hiring shortages and the challenges to fully staff. So we've seen a lot of our top clients partner with teams like our Sales Boost team, which can help them really manage and nurture those leads, and our technologies that help with that, so that the lean team our dealers have can actually focus on those customers coming in that are transacting, that are driving home, and or in that process of changing someone from the vehicle they initially intended on. Right? We've seen, we've always been pretty good at that as an industry. We do know that, past analysis, 76% of people pre-COVID, 76 to 80% didn't buy the car they sent their first lead on anyways, right? So it's not a new thing for us in the industry to be able to push people to what we actually have in stock and to set those expectations. But we've also seen dealers get really good at advertising the inventory they have coming, even if it's a month out, and drive that funnel experience into a really great order process experience, and then updates throughout the order process to make that customer feel really good about the order and to get excited for the vehicle coming. So in a weird way, that's also helping improve customer satisfaction.
Oh, that's a really interesting forethought on that. Thank you so much, Erica. When we talk about consumer satisfaction, it goes right into demand. Demand is high, as Patrick said, and inventory is low, and we are in this kind of perfect storm. But with inventory being low, OEMs have historically produced more cars than the market ever demanded. And in order to compensate for those extra cars that were on everyone's lots that weren't sold, then OEMs would then issue these huge incentives, and it would eat into their profits and that kind of thing. COVID has changed the way consumers shop and the way they buy and the way dealers now sell and service. But to both of you, do you think that it's going to change the way OEMs produce cars? Do you think they're going to say, hey, this isn't so bad, this high profitability thing? What do you think is going to happen? Patrick, Erica?
Well, I think, everybody's going to say that they're going to try and run at inventory levels tighter. Let's say, typically, you'd shoot for a 60-day supply of inventory across the country. Maybe they shoot for 45. And so in the short and the medium term, I think that objective can be hit, certainly because, we're just playing catch up. So we're just shooting even to get back up to 45, right? But once we get there, maybe we're happy with 45. Maybe OEMs are more profitable, dealers are more profitable. But all it takes really is someone in the supply chain, maybe someone managing a plant, who does the calculation and says, oh, we could afford to make another 10,000 more vehicles and pay incentives on them, and we still come out ahead. And then you kind of begin that back and forth. So I think it's going to be, they have found religion in the short to medium term, but long term, I'm expecting, we'll eventually get back to closer to a 60-day supply.
60-day, but not 90-day, right? I mean,
I don't think anybody wants to go back to 90. Yeah, I think maybe closer to 60 is a good target.
Yeah. All right. Erica, you have been in this auto industry 2 decades. What do you think is going to happen?
I mean, we're definitely going to go back to the way things are. I mean, and for the dealers, in a way, it's just this weird two-sided coin, right? We want more inventory, but we really like the profit. It's kind of what every business deals with, right? Volume at a lower margin, or less volume, higher margin. And to Patrick's point, I think it's going to be a little bit out of the dealer's control, a little bit out of the suppliers or our OEM's control. To his point, way upstream, a supplier starts to get into it, realizing they can make more money the more they produce. Then just like anything, we'll see it swing. Let's hope, to Patrick's point, we find a happy middle ground, right? And we don't go back too far, right? I think we struggle sometimes just as humans, right? You go too far one direction, too far the other. But I think the beauty of it, as we think about what this low inventory has created is, but with such high demand, as you mentioned, Eliana, right? Consumer demand's insane, super, super high. And, so that's creating these higher prices, which is leading to more profitability, having less vehicles on the lot. So lowers our floor plan costs. It's I wouldn't even call it a storm. It's like a perfect unicorn or something, right? We have all these great things, right? To something we talked about even yesterday when we were talking about this call was a few years ago, affordability was such a big deal on vehicles. Affordability is out the dough, right? Cars are way up, but people are still buying. And Patrick, you were talking earlier too. They're getting even more picky about what they're buying.
Yeah,
right?
It's interesting. average transaction prices are up. Let's talk about the new side first, because it's kind of fixed pricing. It's less subject to market swings. But the transaction prices are going up because of consumer choices. They're choosing more expensive, bigger crossovers and SUVs, and they're not picking the base model. They want the big sunroof. They want all the safety features and the leather. And so that's pushing up the prices. I'm sure the OEMs would still be happy to sell you a base model sedan, but that's not what the market demands right now, at least on the new side. And so that's what's driving up new prices. On the used side, though, because of these new vehicle shortages, it's pushing a lot of people into the late model used. Now, let's say you're a pickup buyer and you need a certain, pickups are, if you remember from the chart, very constrained. And typically dealers like to have more pickups in stock than any other class of vehicle, because they have so many configurations, and they want to be able to have something for that customer. Maybe you need to tow, or you need to haul a lot of stuff, something spec'd out the right way. So maybe you go looking in the used market, and there's just a lot of people playing in that space because, well, let's see, you now have rental car companies playing in the late model used space because there aren't enough vehicles out there for fleet demand to be met right now. OEMs are prioritizing sales to retail customers because they can typically have a higher margin when they deliver to retail versus fleet. And so that's pushed these rental car companies into the used space. You have people who buy based on affordability only are in that used space. And then you just have, we are undergoing a big demographic shift right now. I'm part of the millennial generation. And everybody has said to me for the past 5 years, oh, you guys don't want to buy cars. You don't want to buy houses, right? Well, okay. Well, my generation got hit by the great financial crisis, and all it did was push back the timing of those big life changes. And so now, once millennials are, we're hitting our prime earning years, we're ready to start families, buy cars, buy houses. So we're going to have this pressure in this late model, in this used space and the new space, from this big demographic shift. So all that combines up to is just, I expect that demand's going to be solid for the next several years, if only for that, not because of all the other factors out there that are pushing up demand.
Okay, so we talked about, you mentioned high prices, historically high prices. The average new vehicle, and I'm sure you have the exact numbers, Patrick, but the average price of a brand new vehicle is hovering around $40,000. A few years ago, that was the price of a brand new luxury car, but that's the price of an average car now. All right, so let's get to it. How long is this record high pricing gonna last? I mean, is it gonna stabilize? Do you expect it to go down? This is crazy time to be in the auto industry.
Yeah. So the used market, right? Again, so you have all the demand there too. And also during COVID, we had reduced supplies of vehicles coming back. There were fewer repossessions. So, repos flow in that used wholesale supply channel. We didn't have rental car companies regularly dumping their inventory into that segment. And then you have off lease. I guarantee you every franchise dealer out there across the country is not sending any off lease to auction right now. They're keeping every unit they can get. And it's been like that for at least 6 months, probably longer. So you have constrained supply on the used side. And then you have the chip shortage. So what happened last year, initially in COVID, prices tanked. Nobody knew what was going on. We reached an equilibrium by the fall. And then by the winter, we had been flat roughly. We're still elevated a little bit, but then chip shortage, boom. And we hit record after record in wholesale prices through June. Well, it looks like we've just turned the corner, and I expect that we're going to plateau somewhere in between where we were at the end of last year and that record high. So that means that these prices are going to be elevated relative to pre-COVID, and they're likely going to stay that way at least until the chip shortage is dealt with. And then probably even elevated a little bit more, because remember, all of those supply constraints, and that takes time. People have to use these new vehicles. They drive them for a couple of years, and that's when they start to flow back into the channels. So, I think we're going to reach an equilibrium at somewhat of a new normal, but prices are higher prices on used vehicles, I think, are here for the next several years.
And Erica, what can dealers do to mitigate this crazy circumstance of, wow, we're making great profitability, if only we had more cars to sell?
What we're seeing be really effective is texting, right? And getting those trade-ins, sourcing your own trade-ins, from your own first-party data, your own database, right? You know those customers, to Patrick's point, that bought used trucks even a year ago, 2 years ago, 3 years ago, especially in that truck market. You can send a text blast to all those customers, let them know that you want their trade, you want to get them in. Now the challenge some dealers have, right, is I get that trade in, and then what do I flip them to? But in this interesting kind of feeding frenzy market, you'd actually be surprised what people go into, especially if they can make a little money now. And, as consumers are hearing reports and stories, they think, hey, I'll make a little money. Maybe I downgrade the vehicle, or I switch vehicles, or I do something a little bit different to hold the money. And then in a year from now, I flip back around when hopefully inventory's back up and I can get the vehicle I really want. And I just pocketed $2-3 grand that next year I wouldn't be able to make when it really is time to trade this vehicle. I'm 2 years in a 3-year lease, and I'm even like, I wonder what I could get. Like, if any Buick dealers out there,
they haven't contacted you? They haven't contacted you?
I did get one. So in fairness, and I don't know if we'll have time to talk about this, I really want a 3-row electric SUV. So I joked, a Buick dealer actually did send me a text blast with our own technology, and saying, hey, we know you're in a lease, we'll buy back your vehicle. And I texted him back, I said, do you guys have the demo electric Hummer yet? I'll take that one.
That looks like a sweet ride.
Yeah, we just put up my email address. If you're a Buick dealer, and you've got the ends. Actually, we do have one of our dealer advisory board dealers. They've already given me their one demo they get of that electric Hummer, even though it's not a 3-row. But they did say they have to drive it for 6 months and then they can sell it. They said they'd sell it to me. So we'll see. But yeah, we're seeing that texting is working to bring in trades. I think we recently put up a case study with Kia Alhambra, and they had what, Eliana?
The Kia Telluride?
No, of the trades. I think they brought in on one text blast, some insane number of vehicles they were able to bring in and turn around. And so we're seeing that be effective, so that they're not having to get into these insane wholesale markets, and find it themselves, source it themselves. We're seeing that be really effective. And that's something that, for example, like a Carvana or Vroom or something is going to struggle to do, right? In that same way, right? They don't have that huge base of pre-existing customers from 3, 5, 10 years ago that they can go back to. So
I've even heard of dealerships saying, hey, come to our dealership and turn in your lease. We will take any car off lease. That's a smart move. There's lots of things that dealers can be doing right now to improve their inventory challenges that they're seeing right now. And texting is a great example. Thank you for bringing that one up, because I don't think a lot of dealers, that's not really top of mind to them, So data mining and using that is fantastic. Okay, let's actually talk a little bit about the different segments in the market, if you wouldn't mind, panel. I'm curious, what are we seeing in the auto industry? I feel like this is a global chip shortage, and the inventory crunch is hitting everyone pretty evenly. There's no OEM that's succeeding terribly well over another, I don't think. But Patrick, maybe you could straighten me out on this. Are imports doing better than domestics? Is light duty trucks doing better than sedans right now? Or is the inventory shortage? Yeah, no, we're all, everyone across the board is getting hit.
Well, I think at this point in the chip shortage, most people have been affected, at least in some way. But if you look at the whole 6 months or so that this has been going on, I think the domestics have fared a little bit worse with regard to the chip shortage, but they pivoted pretty quickly and said, we're going to divert all the chips we can to the most profitable and most in-demand models. So that they're putting, other words, everything to the big SUVs and the pickups to make as many as they can. And I think if you go back and look at the quarterly reports of those companies, that they're still doing pretty well because they're getting a lot higher gross margin per unit despite having lower volume. But just to pivot to the major segments, by a big margin, the biggest segment, most popular, is CUV crossovers. It's over, let me peek at my cheat sheet here. We're at just shy of 46% of all new vehicles sold so far this year were crossovers. That's up from 42% last year. Pickups are hovering around 18%, so doing really well there too. But what's interesting with this inventory shortage. Earlier in the year, it was, okay, maybe you have to settle for a different color, right? And then it was, maybe you settle for a different trim. Now it's a different model even. And we've actually seen, let's see, small car ticked up 1/10 of a percentage point. And so like, cars haven't gone up in a long time. They haven't moved, but this is kind of one of those interesting things that happens. And to your point earlier about, what was I going to say about, maybe buying something in the short term while you wait for the vehicle you really want to become available. I think we might be seeing some of that in the data.
For sure.
I think people are just like, well, I really want the safety features, or I want the sunroof, but I can't find an SUV that has it. So maybe I'll settle for a big sedan. I mean, it's still a new car. You still get that same feeling and have all the fun of buying a new car too.
I will say what Patrick just said, though, is so true. Erica, there is no loyalty in the auto industry anymore. I mean, it's like consumers are jumping brands. What can dealers do with that? What were you going to say? It looks like you were about to say something.
Yeah, and it's not on the consumer. I mean, in a way, it's a credit to the industry and to the manufacturers. There are so many great vehicles. Like, it used to be certain brands. I mean, I remember when I was younger, before I entered the industry, in high school, you'd be like, ooh, that brand? 20 years ago, like, no, you don't buy that. Now there's no more lemons, right? Like, every car is great. And there are so many great ones. You look at the strides of Kia and Hyundai, and, we were joking just the other day about the Telluride here at Digital Airstrike. We call the Telluride the purple unicorn, right? Because we've heard so many stories from dealers telling insane stories that are so hard to get. We're joking, like, the Hyundai Palisade's the same car, like, what? But there's so many great vehicles. And talking about CUVs, I just saw one the other day. I'm trying to remember which vehicle it was, and I was like, oh, that's nice. Like, even Lincoln. I didn't think Lincoln was going to make a comeback. They've got some nice cars on the road now.
And so they have Matthew McConaughey. Of course they will.
I know. But even then, they had like a car that he kept sitting in. Like, it took 2 years of him for the other vehicles really started to roll out. I'm like, I get it. So there's so many great vehicles. And I think, to your point, even then, I mean, you look at these, even with the sedans and the features with front and rear heated and cool seats. And so when you're looking at a CUV at $40,000, and, you're not necessarily seeing the $13,000 new car anymore, but, I can get a $17,000 new car, or a $17,000 used car, 5 years older. But, and save a ton of money. And yeah, it's a little smaller, but it still has so many great features. Like, in the pandemic, in April of last year, I actually bought a CPO i3, and I mean, it was, I because I've been in automotive since I could buy a car. I've always leased. I have an addiction to cars. I just want to switch my car every 2 years. I love it when I get it, and after 2 years, I'm like ready for the next thing. So it was the first time kind of buying CPO, and A, it was a great experience, but B, such a great value. And there are still incentives happening, and I'm really impressed with the manufacturers. Some are still doing 90 days, no payment. I mean, talk about feeding an addiction of getting in a vehicle, whether it's CPO or new car. I mean, you're like, oh, we're still seeing extremely low interest rates, and so that is still enticing. That's helping that consumer demand when a consumer's like, well, maybe I should wait. The prices are so high. And then as a dealer, in all of the messaging and marketing we help our dealers with, it's like, I do in a way feel like now has never been a better time to buy, because the incentives are still really great. So even though the prices are high, you can still get a 0.9% financing. And who's to say, a year from now, whether that's going to be true.
Yeah.
Right? So the consumer, as the dealer, you can certainly build that up. People have guesses and estimates like Patrick, based on data and experience, but the average consumer doesn't know that, that's, so I'd run with it.
I love that you brought up CPOs, because Patrick, I'm going to turn back to you for a sec. CPOs are having a moment. Let's talk about that a little bit. I mean, yes, everyone wants the sale, but a certified pre-owned, they're getting top dollar. And let's just talk about how popular CPOs are right now. Goodbye, yes. say a little bit more. What do we know over at NADA about the CPO market and which way it's trending?
It's definitely trending up. And I mentioned, earlier, every franchise dealer is keeping every off lease they get. And I think off lease is really the main channel that flows into CPO. And so you do this little certification, you maybe do a few more repairs, and then you can sell it for a premium versus a non-CPO used. And the customer benefits as well because it comes with a warranty. So in this market,
and better financing.
Yeah, you're right. You get better rates on them too. Yeah. And so in this market where maybe you can't find the exact new car you want, but you're nervous about not having a warranty, right? If you went used, well, CPO is a great option for you because you get that peace of mind. You're still in an almost new car that's really been thoroughly gone over by a technician and made sure that it's safe, everything works, and you get the warranty too. So it's I really only see, the potential for CPO to continue growing.
I love that. Excellent. I feel like, COVID did a number on the entire world, but there was a few silver linings out of it. We changed as an industry, I think, for the better. But Erica, let's get back to that topic of what dealers can do when somebody comes in and says, hey, I want this car new. What do you have? Okay, we don't have that car, but we have a certified pre-owned or we have a used. How can dealers take that interest, that demand for whatever that consumer's looking for, and maybe shift it a little bit and offer up another car that maybe they might not have thought of?
Yeah, I mean, I think the reality is they're probably not walking in the door and asking whether or not you have that vehicle, right? They're inquiring digitally. So having a tool like our Response Logics that if you do inquire on a particular new vehicle, we have some of our dealers have vehicles that are coming soon they're playing through in the inventory, and the coming soon is a bit of a question mark, right? And so the dealers that are really good at the order process and really building that into an experience and an event will lock those customers in on that, get them on an order. But those that are really looking to turn them, or the customer has, Patrick had mentioned people that literally do have to be in a vehicle right now. They were in an accident, they totaled their vehicle, and they need something. Having that digital response that has not only the vehicle they inquired on, but maybe a lower trim, but the trim that is in fact available, or fully alternative vehicle, and or the CPOs, the non-CPOs, and really highlighting those with the great incentives and payments, and having that go within minutes to that consumer, gets that consumer to know, hey, we've got you, we're here, we're available. What we are seeing is we are mystery shopping dealers, partially because of some of the shortages in hiring and the challenges people are having staffing in the dealership. And because of the high demand and the low inventory, they're like, I don't need to respond. All my cars are sold. I had my best month, right? Like that guy, we don't have what they want, so they'll find it somewhere else. But the smart dealer is saying, we're maximizing every opportunity, whether we put them in an order, whether we flip them to CPO. And we actually had one of our dealers, they're actually in West Virginia. They've been having literally their best months ever as a dealership.
Yeah.
And we were together in June, and they were saying we literally have 5 vehicles on our lot, new cars. 5 new cars, but they've gone gangbusters in pulling in trades and selling used, selling CPO, getting really, really smart about that. They've gotten really smart about getting allocations and then pre-selling everything. All their trucks coming. They're West Virginia. They're a big truck market. All their trucks pre-sold, and they build it into a big thing. It's an experience.
It is.
Get in, get it. And I think a little bit we've seen that work. We've seen that use case work with companies like Tesla, right? They do the order thing. They don't have vehicles just sitting on the lot you can go buy. Or Peloton has done it, and that whole process of the order is an experience. And so having really good technology that can support that and to let customers know that's a thing. If we don't have it in stock, we can order it for you and get your very own. Right? Customize it the way you want it ish. based on what we're allocated. But, you know, and we're seeing a lot of that with some of the awareness strategies we're working with our dealers on, is helping to drive awareness of how great that order process is, and, or to your point, Patrick and Eliana, the CPO process.
I love that. All fantastic ideas. We do have to start wrapping up the show, but I cannot let both of you leave without asking you this very important question. Like I said, it's a crazy awesome time to be in the auto industry. Cars are selling before they hit the lot. So, Patrick, I'm going to start with you. What does the second half of 2021, what is that going to look like? What are we going to see in Q3, Q4? How long is this awesomeness going to last? And what SAR are you predicting for the end of the year?
Okay, so Q3, I think we're still going to be supply constrained. So that is, we're going to have, just limited supply, putting a top on how many new vehicles you can sell. I think that's going to be here maybe by the end of Q3 is when we turn the corner. And then I think Q4, there will start to be enough inventory available. Maybe we can run full capacity at the plants, and we have a really, really strong fourth quarter. So for the second half, I'm expecting the SAR probably around 16.5 million. And then for the year as a whole, I'm also expecting sales of around 16.5 million. I still think there is a lot of risk to production in the third quarter, right? I read the reports from Ward's Intelligence. Mm-hmm. They cover North American production, and they're forecasting highest production in the third quarter in 5 years. But even in spite of that, they highlight that there is risk to the downside. Further impact from the chip shortages, which we're expecting will end up taking about 2 million units out of North American production by the time this is all over. So. But once it's there, once the chip shortage is resolved, I think it's going to be gangbusters as far as, because there's still going to be demand out there. Once you meet all of the needs of all your retail customers, then, these fleet buyers who have, in some cases, put in an order for model year 21 and have been punted to 22, they're going to be waiting there to buy all these vehicles too. So even if the retail were to suddenly drop, not expecting that, there's still plenty of fleet demand. So 16.5 for this year. And then, I think we're going to be closer to 17 in 2022.
Woo, I love it. Now, Erica, dealers are like, hey, profitability, cars are selling. We have this is awesome. We're amazing. But so a lot of dealers are like, so we don't really have to do anything. We'll just not advertise. We'll just sit here and just let the cash roll in. Is that the right strategy they should be taking?
So, I think how I answer this, people are, of course she's going to say that. We're going to get any benefits. So fine, take us out of it. Take Digital Airstrike out of it. When I talk to dealers, and the ones that are the most successful, right, not just now, but what they're putting in place right now, they are not stepping off the gas. They are leaning in, they are keeping their foot on the gas, and those that are stepping off the gas are taking their name out of the market. Awareness is still a piece of the market. You go dark, and I say this one for all the vendors in the space. You know what it's like when you show up in an ADA and a vendor's not there, and you're like, what happened to that vendor? Where'd they go? They sell? Something happened? Right? Like, they must be doing bad. So it's like a presence thing. So for dealers too, you've got to stay present in your community. You're one of the biggest participants in your community. Keep it in, keep those orders coming. CPO, get smart on your strategies. Get creative on your strategies. Get creative on your solutioning there. Lock down those orders because the inventory is coming back. We have a lot that, we just talked to an Acura dealer. They got 100 new cars delivered. And they got like a bump in their allocation. They didn't realize they were getting that many, and they'd actually pre-sold quite a few. But then they're like, oh shoot, we got to get all these moved because now they don't want them all sitting on the lot, and they want that turn time. They want that velocity, that 30-day turn, right? And so they want to keep it moving. And so don't take your foot off the gas, right? No dealer is in this market to kind of step back. We're all in it to kind of move forward, and that's my advice. So whether it's with us or somebody else, I don't care who you do it with, but don't go into a hole now just because you think it's good times right now. You've got to keep your name out there. You've got to keep those relationships with those customers moving forward, and then that way too, if you service them on anything, whether it's your service, your parts, your accessories, whatever part of the business, when they are ready to get in the market, if they are someone who decided to like, oh, I'm going to wait, prices are high, maybe next year, you will make sure you have the lock on the customer. They're coming to you first. So while there may not be a ton of brand loyalty, I do think there is relationship loyalty with the local dealer if you can do it right. I see it all the time.
Preach it, sister. I love that advice. Thank you so much, Erica Sietsma and Patrick Manzi. Man, this was a great conversation, wasn't it? I know it was short, and we could have talked for another hour about so many other things happening in the auto industry, and who knows? Maybe we will. We'll have this team back together again. You two work great together. Thank you so much, both of you. I want to tell you that Patrick Manzi is actually going to be at the upcoming New York Auto Forum on Wednesday, August 18th at the Javits Center. Oh my gosh, the return of auto shows. It's going to be amazing. And the New York Auto Forum is actually hosted by J.D. Power, NADA, and the New York International Auto Show. And the Automotive Forum is going to discuss how current industry and economic conditions are going to shape the future of the automotive market. And for more information about that, we have it right on the screen. You can visit autoforumny.com. And Patrick, I'm looking forward to seeing you there because I am not, I'm down in South Jersey. I'm definitely taking a trip up north to go to that New York Auto Show. I just love it. So thank you so much. Not to be outdone, by the way, join Erica Sietsma on an upcoming Digital Airstrike webinar. It's going to be on Thursday, August 19th with none other than Lisette Gohl. She is the head of automotive retail at Google. They're going to discuss a brand new Google study that covers fixed ops insights and consumer trends and the digital strategies that dealers should use to drive more business to their service lanes. For more information about any of our broadcasts, Facebook Live, webinars, whatever we have going on, you can simply visit digitalairstrike.com/webinars. We have it all there for you. So thank you so much, Patrick and Erica. I'm looking forward to getting this team together again sometime soon. But on behalf of Patrick Manzi and the fine folks over at NADA, Erica Sietsma, and the rest of our great Digital Airstrike crew, thank you all so very much for spending this time with us today. And I hope to see you all on another broadcast in Digital Airstrike's continuing education series. Take care, everyone.
Bye. Thanks, Patrick.